Well, thank you very much for rejoining us for our next session in the WPP-BAV Alibaba 11/11 Global Shopping Festival broadcast. And I'm now joined by Stacey Widlitz, who is the founder of SW Retail Advisor. Stacey, thank you very much indeed for joining us.
Thanks for having me, David.
Stacey, you are an expert on all things retail and all things China, and all things to do with the street and the city. So we're really looking forward to getting your sort of helicopter perspective. Stacey, let's start, I suppose, with a question that a number of people have been asking over the course of our broadcasting, which is, we can see the huge impact that 11/11 has within China. But what impact does 11/11 really have for retailing across the world?
Well, I think globally, it's the brand building occasion of the year, right? We know that it's bigger than Black Friday, Cyber Monday, Thanksgiving, all rolled into one on steroids. So it's really more of a global view at this point. And I think most interesting, we're seeing a lot of US brands kind of try to capitalize globally by having events in Europe and North America. And also brands inside of China, what they try to do is they test all year long and refine products to really launch on this day. So it's a pretty big deal to take all the insights from Tmall Insights that they've learned all year and come out with new products, particularly on this day globally when so many consumer eyeballs are watching.
I mean, you've been an observer of 11/11 for many years. How would you categorize the change from the first year, some 13 years ago, to what we're seeing right now?
So what's really interesting this year, and something you and I have talked about, is in previous years, it's been really focused on discounts. And this year, it's number one, there's an element of sustainability, clean beauty. There's a green page. So perhaps China is catching up to some of the trends we've seen in North America and Europe on that front. And also, I think that interesting, the discounts are kind of flattish this year, which is reflective of what's going on globally. And I think the last really interesting trend is that we're seeing brands, because inventories globally are really, really low, as we all know, and therefore discounts are low, they're being creative. So they're doing things like giving customers NFTs. So it's about experience and VIP treatment rather than just throwing blanket discounts at the consumer. And the consumer is absolutely reacting to that. And that's what we've seen over the past year.
I think you're absolutely right. One of the things that struck me this year is just how much sort of fun and joy is being brought back into the shopping experience. I think maybe it is because the focus is off what's the percentage discount from pre or last year to something that is much more creative and much more engaging. I mean overall, do you think that across the world we've lost the fun of retail?
I think there's been so much narrative around the world about physical retail is dead. And obviously, we had a tough 2 years here where it was very challenging for so many brands just to keep going. And I think that's forced them to be super creative and perhaps rethink what they're doing. And also think more about the consumer's holistic experience and say, you know what, if the consumer doesn't want to come to the store, let's do some live selling. Let's have events. Let's have priority access. Let's think a little bit differently about how we can get the consumer excited. And, some of the live selling that's gone on globally, which, by the way, started in China, now has really caught on in North America and Europe. And that's actually one of the things that's come out of China and helped us operate so much more efficiently in other regions.
Now, clearly one of the things that came out of China was a lot of Chinese tourists. That's, I'll say, pretty much stopped, but it is stopped completely. And it's difficult to see when that's going to come back, certainly not at the beginning of 2022, if not to the end of it, maybe. The Chinese tourists, on average, spent a lot of money when they were doing their European and American tours, especially in the luxury sector of the marketplace. Have we seen I suppose, a realignment of Chinese spend in the luxury market?
So, David, you and I are sitting in the UK, where when the Chinese come visit here, 2/3 go shopping. They spend much more than any other consumer. And, they go to places like Bicester Village. That's their second stop after Buckingham Palace. So,
well, yes, I think if you a bit of a generalization, but there are two things that the Chinese know about. One is Buckingham Palace about the UK. One is Buckingham Palace, and the other one is Bicester Village.
Right. But they love to come, and they do love to shop, and they spend more at home. And what we've seen is that even before the pandemic, we started to see some repatriation of spend into China. So now the big question is, when the gates start reopening, no doubt that customer will have an appetite to travel and spend again. But they're so used to spending at home. So now the brands have to think a little differently, and they have to kind of relaunch that geographically unique product in different major cities, because if that tourist is traveling around to Paris and New York and London and they expect unique product in each place, that is going to be the way to continue to get them to spend, and perhaps to add on to their shopping at home rather than just replace it in other places.
I mean, do you think Chinese consumers will still have an appetite for travel? Is this something that is just being postponed until they have the opportunity, or when the planes start flying again from Shanghai to London, it won't be as attractive to Chinese consumers as it has been in the past?
I think they will come back. And I think that Chinese consumer is inherently incredibly curious, not only about whether it's culturally what the world has to offer, but again, that unique product. And they also like to experience historically new brands in local territories. And they tend to take that love of new brands that they discover wherever it is in the world and bring that home. So it's so important for brands to get that shopper back so that they can discover them in their homegrown territory.
But in a sense, what you're saying is that there is an onus on brands now, well, maybe not now, but especially now, to continuously innovate.
Absolutely, and again, it's just been that consumer now is so used to shopping at home. So before they just naturally traveled and went on shopping trips. So if they're so used to staying home and spending at home, the brands really have to get them motivated, not only to travel, to experience different things and perhaps even unique VIP events, but also have different merchandise in those destinations so they increase their total spend rather than just swap it out for what they're buying at home.
Well, it's impossible for me to have an expert like you around retail not ask this particular question, which is, we are seeing a whole series of inflationary lines right across the retail P&L and the manufacturer's P&L and costs of goods. Is this something that you see as temporary or permanent? We haven't had to deal with inflation for so many years, and from a retail perspective, in fact, we've had the opposite. We've had price deflation for more years than I can remember. Is this a transition? Are we going to have to learn how to manage a business and deal with consumers in an inflationary time?
I think, it's interesting. While the pandemic has been so terrible, obviously, for so many brands and retailers around the world, in some sense, it's been the greatest consumer brain reset that I've seen in 20 plus years of looking at retail. And I think when everybody pulled back on inventory, now there's shortages all around the world. We see not only did brands not order enough for the pent-up demand rebound that we've seen, but as we all know from the headlines, things are stuck on chips and
everything's not in the place it should be.
Exactly. So now everything is full price if you can find it, and consumers are out there and they are paying full price because there is such a shortage of inventory. So I think next year, this time, perhaps consumers don't expect the level of discounts that we've seen for the past 15 years. I mean, we're always seeing 50% off going into holiday. We're not going to see that this year. So while a lot of brands have become smaller, they've become a lot more profitable. And I think for many, that is something that will stay.
Now, we've also seen, as you allude to, many retailers and brands had the ability to take quite a lot of costs out of their cost line. And that clearly improved either their cash position or their profitability. Clearly, as things return to whatever the new normality is going to be, a lot of those costs are going to go back into their P&Ls. To what extent is the street going to be looking harshly at those companies that are increasing their costs, but also have the inability to grow? Because I think for the past couple of years, they've given them quite a big pass.
So that's a great question, because really what we've seen is the street has kind of looked at the stocks and said, okay, fine, the revenues are down, margins are way up, and we're going to pay for that because there's some anticipation that revenues will recover on the other side of this. So now many public companies are under pressure to they have these really high margins, but now they have to start showing revenue growth again. And again, as you said, it's on a backdrop of higher costs. Stores are having to pay bonuses to retain people to come on. There's higher wages that I argue are permanent. You don't raise somebody's salary working in a store and then push it back down a year later because COVID's over. So I think a lot of these inflationary pressures are very sticky, and the cost structures will continue to climb. Marketing has to come back into the mix. So a lot of brands really need to show that revenue growth for investors to continue to be interested in a lot of these brand stories.
And how difficult do you think that's going to be? I mean, you're an ex-financial journalist.
It depends who you are. So what we've seen from the luxury players is incredible growth. I mean, many of these luxury guys are up 30% over 2019. These are amazing numbers. You've seen so many apparel brands up versus 2019. There's a mall report on the US just reported sales up versus 2019. I think the big concern is that we're in this pent up demand phase, and brands and retailers are trying to figure out, once we work through that, how do you order for next year? How do you gauge demand? We can't truly believe that this period, the trajectory is sustainable, and you don't want to over order because then we fall back into the discounting cycle again. So it's going to be an incredibly tricky balance in 2022 and 2023, I think.
I mean, it's very difficult to be in the prediction business at the moment, isn't it? Because these things are very unpredictable.
They are. And again, we want to avoid getting back into our old bad habits. But I guess the good news is that companies have gotten a lot smarter during the pandemic in terms of lead times, technology, 3D design. So all of those things that have forced them to get better in terms of inventory cycle puts us in a bit of a better position coming out of this. But of course, not totally, because really we are still in the forecasting business.
Now, we are probably in the most thought-provoking period in the last 20 years in the retail world. What thoughts is that provoking for you?
I think at the moment, it's very much about what we talked about, which is how do you balance being full price and smaller versus discounting? How do you balance that consumers' need and wants for the discounts versus just maintaining a higher profitable business, particularly with the backdrop of inflation? And I think one of the other really interesting trends that we've seen that's here to stay, and perhaps will be even bigger than many think, is resale. We're seeing so many brands take that in-house in terms of the secondhand market. So I think you're going to see a lot more brands start to do that. Perhaps maybe even some of the luxury brands that are typically late to the table in trends. And perhaps that catches on at some point in China, similar to how now clean beauty and green is catching on. So I think that's going to represent a nice portion of retail going forward, maybe even 20%.
Now, tying this back to sort of where we started, 11/11, what advice would you give to retailers around the world in terms of what they should be looking to 11/11 to help them understand the direction of retail in their businesses outside of China?
I think it's a great day to test, to put a new product out there, and also to test by market. You don't have to just be in China on that day. I think also it's a day to test very unique product. And this year, again, it's about full price, it's about experience, and it's about being incredibly creative, like with the NFTs that the luxury guys are doing. So I think this year it's really about thinking out of the box, because we don't have those discounts to kind of fall back on as we usually do.
Well, I know I said it was difficult being in the prediction business, but finally I'm going to ask you to predict something. We are fast approaching not just the end of 11/11 this year, this Thursday, but in a sense that heralds the beginning of Thanksgiving, Black Friday, Cyber Monday, and the Christmas and holiday season. At the end of 2021, are retailers going to be happy or miserable?
I think at the end of the year, they're going to be happy. And that was a very different story even a year ago or 2 years ago, right? Because it was all about store closings and physical retail Armageddon. And I think the sense is right now, what you're hearing out there is that even malls now have some pricing power in terms of negotiating leases. Everybody's coming back. They want to be there. And that is a very different conversation than we even had 3 months ago. So I think we exit this year feeling like we don't have to give everything away, and that the customer has spoken and they're willing to pay for great, unique product, and great, unique brands want to physically be out there in combination with their e-commerce.
So in summary, the brand's going to become more and more important as opposed to less important in this new world?
Brands become more important. And in addition, I think what you're going to see over the next 2 years, which is not a new trend, but I think it accelerates, is that brands are continually going increasingly DTC. They're going to start calling their wholesale partners, right? Because those are the ones historically that step out and discount. So I think, some of the brands out there that have maybe 30-40% DTC in a few years maybe look more like luxury brands, and they're at 70-80% DTC. So I think that's really going to be the biggest change over the next several years.
Well, on that optimistic front, Stacey Widlitz is the founder of SW Retail Advisors. Thank you very much indeed for joining us and being so generous with your deep insights. It's been an absolute pleasure. Thank you very much indeed.
Thanks for having me.